Thank you so much, and thank you for doing that short exercise. Now we know for sure that nobody's sleeping, so which is good news for us. At least you will hear us. Thank you so much. Thank you so much for your time, and this is a very exciting time and phase for us to do this kind of a discussion because this truly involves open banking, digital payments, and financial inclusion. Very, very, very critical three triad topics for the country, and I'm delighted to be the moderator for this discussion. So before we start asking questions on these three segments, I just want to, speak for a minute on the segment on all the three topics, so that when we get to the questions, that there is a short brief to everybody in what we are really discussing. So as we gather here for the vibrant financial hub in the Philippines, in the country, we stand at the cusp of a transformation era in the banking sector. Open banking is changing the financial landscape by fostering innovation and competition. By allowing third-party providers to access banking data, we are enabling the creation of more personalized and efficient financial services. This transparency is not just a technical shift, it is a catalyst for more inclusive financial ecosystem. Digital payments are the backbone for this transformation. In a country where mobile penetration is very, very high, yet traditional banking access remains little limited, digital payments offer a bridge to the financial services for millions of citizens of this country. From mobile wallets to QR code payments, these technologies are simplifying transactions and expanding economic participation. Financial inclusion remains our ultimate goal. By integrating open banking and digital payments, we can bring underserved communities into the financial fold, providing them with the tools to manage and grow their finances. This is not just about technology, it's also about creating opportunities and improving lives. So as we delve into today's discussion, let's explore how we can harness these innovations to build a more inclusive and dynamic financial future for the country. Thank you so much for your time, Michael and Manuel. I'll definitely start with a very basic question in terms of financial inclusion remains a global challenge. How can collaboration between public and private sectors leverage open banking and digital payments to reach unbanked and underbanked population? So, Manuel, if you want to go ahead first.
Yeah. First of all, good afternoon to everyone. I'm Manny from True Money Philippines, the Managing Director for True Money Philippines. And True Money Philippines has been the forefront in terms of serving those unbanked and underbanked individuals for the past few years. We're basically the last mile partner for financial institutions to be able to reach more customers. Financial exclusion, the way we see it, is really a main challenge for still in the Filipinos, particularly the far-flung areas, especially even in the rise of digital payments right now and mobile wallets. We've seen still challenges in terms of how we could be able to deliver new products and services on the market. In terms of the private sectors, what we're seeing right now in terms of the trend for us to be able to achieve more financial inclusion is really for financial institutions and even technology providers to form and be collaborative in terms of providing services available. And open banking is one of the services that we feel will be able to achieve those financial inclusion in that respect. What we're seeing on the ground right now is, even on the rise of e-wallets, such as the top players in the market, there's still a need for them to be able to access their traditional banks. And for them to be access it and provide us customer experience, there should be a collaboration between financial institutions. So gone are the days where certain financial institutions are really privy for their data. What we're seeing right now is the exchange of data is really high for us to be able to achieve new services and achieve financial inclusion in the Filipinos.
Yeah, Michael, your opinion on the same question.
Thank you very much, Manny. And hello and good afternoon from this historic hotel. We all know why, and
Yes.
we will miss it. All right. So hi, I'm Mikey. I'm from RCBC, and I'm part of the Digital Enterprise and Innovations Group. I handle usage strategic businesses. I'd like to really answer the question really in 2 points. First, for financial inclusion, do you know that financial inclusion, at least from a policymaker standpoint, from the BSP standpoint, we actually crossed the it's no longer a problem barrier in 2021. You know why? Because from like 2010 to 2019, the number of bank population, the people who have bank accounts, e-wallet accounts, or at least any form of account, was just hovering at like 10 to 20%. It looked like 10 years to go from 10 to 20. In 2020, 2021, in just like that 1 to 2 years period, we went from 20% to 60%. If you look outside, you can see that all of the carinderias now have a QR code. The palengkes have a QR code. Your kamag-anak in the probinsya has an account, not necessarily with a traditional bank, but also with an e-wallet. So, in a way, it's already mission accomplished. But on another way, it also means that we have entered this new paradigm. Financial inclusion is now a bigger challenge because now there are now those areas, there's those locations in the country where traditionally it doesn't make sense from a normal bank to enter. That's why we need to enter into partnerships with entities like True Money and other last mile entities to make banking available in those areas. For RCBC, we have something that's called the ATM Go. So we transform the POS machine and turn it into a little ATM that can be deployed at a sari-sari store. Why? Because people still need cash. And let me also ask, what happened in 2020 that made that big change in the country? The pandemic. That's true. Because people can't go out. But just because people can't go out doesn't mean they need accounts, right? They'll need accounts because back then the government, looking at the public sector partnership, had to release a lot of money called the ayuda to millions of our kababayans. As a result, many of them had to open accounts for the first time. Whether that's with a government bank, whether that's with their e-wallet, or whether that's with an accredited bank, of which RCBC is one of the thankful few. And so we got an influx of new depositors now who now have a bank account for the first time in their lives. Or bank account, e-wallet account for the first time in their lives. So from that level, financial inclusion, check. But as for open banking, and sorry if this might preempt a future question, is open banking a common knowledge for everybody? Not really. Because banking, if you think about it, banking shouldn't be open. You don't want people looking into your bank account normally, right? Yeah. But open banking is going to be the future because we need to develop it, because people need to transfer and actually make these funds fungible. And later, probably, I don't want to preempt the next question there, but...
Those were my next questions.
Thank you very
That's
much.
okay.
So, open banking, because more people have accounts now, and they don't have accounts in the same institution. Because 10 years ago, if you think about it, how did you transfer money from one bank to the other? You went to the branch, you lined up, you withdrew the money, then you crossed the road, you rode the jeep, you went to the next bank, you lined up again, and then you deposited the money, and then there's a deposit slip, and then you have to take a picture of the deposit slip, and then you get the story. Now it's take a photo, or at least, you just use your favorite bank app or e-wallet, send the money. That's the most basic essence of open banking. Making funds fungible. And then after that, we'll go into data. And then making everything easily translatable and readable for all of the institutions.
Thank you so much, Mikey, on this. Manuel, we'll stick to the open banking concept. In terms of, that's a very valid question that Michael also pinpointed. In terms of open banking, it sounds like a very easy term, but not necessarily that everybody really understands what really open banking is. Is it really good for me? Is it not good for me? Or should I be, not really bothered about what really is open banking? What's your thoughts, or maybe we can get some education from your side also in terms of how effective the open banking could be?
Yeah, for open banking, I think for financial institution, it's a common term. But for the end customers, open banking is relatively new to them. I'd like to build on what Michael mentioned a while ago. Yes, we've seen the rise in terms of e-wallets or digital banks for Filipinos. But the main question there is, how do they fund their accounts? And that is where open banking actually plays a big picture in terms of how they could be able to fund their accounts, then use it on their daily lives. That's the biggest question. I've been in one of the e-wallet players before, and one of the challenges that we face is account opening is relatively there, meaning a lot of people opening, but how do these customers can be able to use? And one of the pain points that we've seen is actually how do they fund their accounts. Most Filipinos do it on the over-the-counter channels, that's one. But if you look at it on the bigger picture, the people actually, the funds are coming are from the bank individuals. Meaning it's coming from a deposit account where they actually would withdraw it from an ATM and then they go to another over-the-counter channel and be able to deposit it on their cash, on their e-wallets in that respect. And 5 years ago, this was one of the main challenges that we've faced. And open banking actually addressed it. I'm proud to say that during that time, we were partnering with one of the top banks in the Philippines to enable fund in to their e-wallets. And during that time, it was not an open thing to most of the banks. And exchange of data is something that is not available during that time. And we were pitching it to most of the banks. And during that time, most banks are really hesitant. But again, to address the financial inclusion, there should be funds coming in to their wallets. And that is where open banking plays a big picture, a critical picture. Maybe to answer your question in terms of what's open banking is, for me, open banking is how we could be able to share across certain datas with ensuring that there will be a certain level of security which most of the banking institutions are comfortable to exchange with, or maybe the end customers can be able to share with. And open banking, there's a lot of use cases that the banks can be able to utilize. But again, to address the financial inclusion in that respect, the main question is how do this e-wallet or end consumers can be able to load their funds. And open banking and open finance or embedded banking is something that is going to be the key for us to basically address this financial inclusion. One, it's just a first step for them to be able to account. The next step is how do they fund their accounts in that respect. And that is where open banking plays a critical role.
Giving the consent or the actual consent is with the end customer. They decide where they want to share the data with. And technically it would be enabled, the ecosystem would be enabling this transfer of data with the consent provided by the end user. And it's no longer the days, once the open banking opens up, there's no longer the days that you have to actually take up those printouts and dump it out one by one and then wait for things to happen. With the consent management and the open banking, data can be shared with my consent, and the financial institutions would be able to act on that particular application that you're applying.
Maybe to add to that, I think at the end of the day, it's going to be the customer data.
Yes.
It's actually the customer or the end depositors in that respect should be the one who has the capability or the authority to say if he's comfortable to share that data with.
The consent has to be given by them.
The consent has to be there.
Correct.
And the banks, I think on the bank's perspective, there's no data being shared, confidential information. As long as the customer agrees to it, I think that's one of the main principle for open banking. Michael?
That's actually a great starting point, really. It's first level of open banking, if we could oversimplify the topic. The first level of open banking really is being able to transfer funds from one financial institution to another. And I said financial institution because I don't just mean banks, I mean e-wallets, I mean even in the future, your rural banks and all of the other account types. It should be easy. It should be a no-brainer. Money is money. The second level, really, is data. And by data, we mean personal data. When you apply for a loan with another bank, or when you apply essentially, when you apply for a consumer loan, you shouldn't give the same information twice. You shouldn't request it more than once. It should be available and translatable to create what's very common in the Western world, your credit score. And you should be aware of what your credit score is. Because right now, credit scores are mostly handled by third-party entities. Because, well, we don't have it's being set up. But we have a CIC, it's being set up. But it's not there yet. But in the future, we are building the infrastructure, the banking industry is building the infrastructure to make that personal data accessible. I'm applying for a bank, can you have my records from another institution? Third, how does it apply to financial inclusion? For us here in this room, and I think it's safe to say that we're part of the banking sector, we're part of the technology sector, we have pretty advanced finances. We're okay. But for our kababayans, for our countrymen, that data does not exist. First, they don't have IDs that much. Second, how do you actually generate income data if you don't have payroll as we know it? If you are a seller at a palengke, where's your financial data? What's financial data? You can translate your little ledger into financial data. So you need alternative data, which can now be shared from whenever you pay your bills using your e-wallet, to be readable by a bank. So that's the next level of open banking. Making that data available for credit, and so the banks can actually lend to more of our countrymen. Because right now, there's no basis for lending if the data doesn't exist.
Correct. So that's a very valid point, Michael. So while we are still talking about digital payments, open banking, and these are things that's coming up in the future, how are you currently managing this data that is actually coming to you? This is very critical now because everybody's saying, okay, future looks bright, but is it bright today? How are you really managing? Are you able to convert this data? It takes a lot of manual effort to convert this data. How do you analyzing? Is it everything manual, or you have actually done the partnership with fintechs, or is there a third-party partnerships that you do, or you have built stuff yourself? How do you manage data that already exists with you?
Right. If I may, at least for our CBC, we have adopted an open API strategy. We're open to people partnering with us, of course, as long as all of the cybersecurity, as long as the consent infrastructure is there. So we are partnering with third-party entities, with fintechs, to get that credit data available. We're partnering with the government to actually have a better verification system for KYC. We, of course, want to verify all of the government IDs being presented to us upon account opening. Whether you open an account digitally or via a branch, we're looking into now making that verification easier, because it should be easy. It shouldn't be, you have to train your tellers how to spot a fake license. It shouldn't be that way. You have to get that data somewhere and make it easy. So we're adopting that. Essentially, it's a bank-wide effort. We are adopting that stance that we are open towards partnership, and then essentially just making our APIs available.
Okay. The fintech approach, what is the approach there?
Well, from Flow Money point of view, given that we're a multinational company, we're actually utilizing some partners to be able to help us in terms of data verification in that respect. We're utilizing it for eKYC processes to ensure that the data or the information provided to us are valid in that respect. And we're also partnering with other third fintech players in that respect to counter-validate the data that we actually have. So that's how we utilize the data for True Money Philippines in this open banking ecosystem.
Yeah, for mobile wallets or contactless payments, these are trends really shaping up the digital payments. What are the security concerns that are very critical for the end customers to be very careful of? So in terms of financial institutions, what are the things that you are very careful about?
For open banking in that respect right now, critical information that really the username, the passwords are really something that most of our customers are not comfortable in terms of sharing. So what we wanted to ensure in terms of providing this customer experience is we want to add another layer to authenticate this information. And using tokenization, we wanted to ensure that no sensitive information is stored within our system, and those information are basically taken care by a partner bank or let's say a financial institution with that respect. We wanted to implement some controls within our sides when we're doing some API integrations. Maybe just I wanted to share with the audience right now, during the early days when we're doing this open banking and open finance, there was been a questions in terms of how the users are comfortable enough in terms of doing or linking their bank accounts. I'm not sure if most of you, but there are some use cases that is actually enabling you to store or remember your credentials and just link it respectively. But what we noticed during the early days are people are actually more comfortable logging in their username and password and OTP every time they log in rather than linking it. Because it gives them a certain level of security in that respect. So these kinds of layers is really something that we want to ensure that the confidence of the end users are there once they transact, especially for open finance or open banking in that respect. Because at the end of the day, we have to ensure that we protect those data and those critical information, such as the username, passwords, are not being shared across the networks. And tokenization is really something that's going to be helpful for that.
Sure. Michael, your take on this?
It's very good.
Security
Sorry,
and
again.
privacy.
Tokenization essentially just means that you only share, the user only shares the data which is relevant to the transaction, and that they are only consent to the relevant pieces of information being given out. But that's for the credit side. For the funding side, the fundamental principle is you have to actually give the consent whenever you do the fund transfer. And it has to be verifiable. Because otherwise, you'll suddenly wonder, why is my e-wallet getting my bank balance every Friday? And then you forget that you actually made the authorization. But I guess one challenge, if I may just raise it, one challenge that banks and financial institutions with digital apps now see is people do want the convenience. We actually have an internal discussion right now. Should we make people log in every time? Or should we just pair it once and then make it single click? Because the customers are demanding it single click. Why do I have to log in every time? Although so far, the solution is biometrics. Biometrics is making it easier, making it there's at least consent every time without actually entering complicated passwords. So there's a little not really a conflict. There's that balance that needs to be struck between convenience and security.
Yeah, so that leads to my next question. So the balance between the convenience and security, when do you know you have to stop? Because at the time that you're trying to get more and more convenience to the customer, at time there will be a stage where you will freak out the customer because you're getting too convenient for him or her. So what is that balance really? While we touched upon the balance, because this is one convenience that customer says, I don't want to type again and again, but this is just biometric and you log in. But there are times where banks, and not just in Philippines, in other countries also I've seen, there are banks that have customized their offerings and their pages so much that you kind of realize that, hey, this bank knows too much about me. What is the real balance that you need to say that, okay, let me ward off now because this looks like I'm going too much into it and the customer will freak out if I go any further there. So there has to be that balance there as well.
I think for balancing, I would say there's no definite rule. I would say a standard rule to answer that question. But the way we're looking at it is really in terms of the customer experience. When I say customer experience, we don't want a certain level of security that really doesn't make a lot of sense. Maybe like, for example, logging into your account, it's one thing. Maybe an OTP could help. But actually, what the critical information that actually matters is when the moment I fund out from my account, that is something where maybe another layer of security should be able to be in place. So we have to be able to understand the risk involved for certain transactions before to balance things out in terms of providing customer experience and security. To your point, we don't want a situation where every time I do something within my phone, I have to get an OTP. That's good, yes. But sometimes it's really...
There has to be a balance to that sometimes.
Sometimes you have to understand that for let's say, viewing your account, maybe it doesn't need another layer of security. Maybe the second level of authentication should happen when you actually transfer from your bank account in that respect. So that's something in terms of balancing. The second item that I also want to maybe emphasize is really more in terms of the customer behavior or the nature of the Filipinos in that respect. We want to understand how the market behaves and how the acceptance of these customers. To your point, the way I'm seeing it on the early days, people don't want to link their account because they find it a little bit scary because every time they can be able to pull their funds in that respect. But throughout the time, as mentioned by Michael, what we've seen is the certain level of confidence has gained certain level of traction, which the end customers are already comfortable and knowledgeable that, okay, I link this account, but every 30 days it expires, so it's okay for me. So it's really more of how the adaptability of the Filipinos in terms of these new services. Maybe for the first 6 months or 1 year, then another layer security. But if people are getting more and more comfortable and based on the data and analytics that we're seeing, fraud are basically on the low rise, then that's something we can engage in terms of balancing those security.
Michael, I have a very relevant question for you. It's a very banking question. Okay. While your bank or the all other leading banks in the country would be taking additional and more steps to wow the customer or give the good feeling to the customer, do you think the ecosystem is also supporting you and the regulator and the other? I know it's not really the question that I'm asking, is it the ecosystem also supporting you when you are also trying to move forward and say that I would also like to take 5 additional steps? Is the ecosystem is also allowing you to take that additional step along with regulatory body as well?
Is there a BSP table? Okay. Safe space.
It's safe space, you can speak now.
But actually, kidding aside, the current Philippine industry is actually very receptive to open banking. In fact, the regulators made it possible for InstaPay and PesoNet to happen. Remember, InstaPay and PesoNet did not exist before, which is why you have to deposit, withdraw, and do the whole shenanigans with cash before. It took us an embarrassingly long time to enable interbank transfers in the Philippines. It took us, 2019 before even that happened. So the regulators are very, very supportive for open banking.
Good to know.
As for the industry, I don't think it really is a question of willingness, but really a question of infrastructure and prioritizing. Because I think if you talk to senior management, most senior management I think will be comfortable with, okay, this is what's going to happen. It will make our credit easier. It will make our KYC easier. So the benefits are clear, I think, to most bank leadership. The issue will be, is their infrastructure and the IT support ready to actually create these APIs, to actually create the connections? But as for the regulatory industry side, I think the beginnings are already there. The BSP already has an open banking framework. We're already building a credit information corporation. So it's beginning to be there already.
So Manuel, I mean, you have been with TrueMoney and working with in the Philippines market for a while. What is your opinion from your perspective? Because you're not a bank, so your perspective and how this is really growing.
In terms of regulations, I would say the Philippines is a little bit ahead, particularly with our neighboring countries for in Southeast Asia. TrueMoney is present across 6 countries, and Philippines is one of it. The way we're looking at it, Philippine regulators are really open in terms of these kinds of initiative. And that is something that we really appreciate in terms of how the regulators look at it. There's a framework in terms of open banking. The NRPS is there. The InstaPay and PesoNet really paved the way in terms of how the open banking is. But to Michael's point, the main challenge right now is how the financial institutions are ready in terms of their architecture, systems to be able to be open in terms of sharing those data. Because it takes, especially for traditional bank, we have to be honest about it, it takes a lot of restructuring for them to be able to be open. As Michael mentioned, for top and senior management, there's a lot of benefits to it rather than the risk involved. But again, it's really more of prioritization in terms of resources. That's really something. And what I'm seeing for the Philippine market is there's really a good collaboration between the financial industry, maybe with an e-wallet, a fintech, a banking segment. They're all in it together in terms of how we transform. And actually, to be fair with the regulator, it's actually sometimes the industry, the financial institution who's feeding certain information for us to be able to standardize it across the board. And that's something that really appreciate about the regulators in the Philippines. It's really more of their openness, but they have to play their role. They have to standardize it and to make sure it's a fair.
Yeah,
fair,
so that
fair-
was the question. I
fair
mean,
game, right?
are you getting the support? So obviously
Actually,
you're getting
on
the support.
standardization, we actually dodged a CX bullet when the government, when the BSP standardized QRPH. In other countries, most shops will have like 10 QRs, one per bank, one per e-wallet. But at least here, we have already standardized it, ensuring that any bank can read any bank's QR. Which is a big
That's
thing.
incredible. Yeah, correct. As we're running out of time, I just wanted to check if there is a question from the audience for Michael or Manuel or me.
Hello.
Oh, there's a question.
So the Triad of Open Banking, digital payments, and financial inclusion has one giant step or one giant to defeat, which is the legal institution. I'm sure many people in this room would agree with me that maybe the lawyers that you deal with are one of the most difficult, especially when it comes to innovation. Now, for the two speakers in front, may I ask, what is your wish list? Regardless of what open banking is for us and how our regulators are a little bit more adaptive, our laws are not up to par, correct? We do have the secrecy of bank deposit laws, so that is a one big hurdle that any banking institution pushing for innovation has to go through. What was your one big wish list, at least from a legal perspective, that you want to be able to surpass in the next few years so that innovation, open banking, financial inclusion, and digital payments would move forward?
Maybe I'll just answer. I can't answer in terms of the banking, in terms of bank secrecy law in that respect. But in terms of the fintech, for us to be able to achieve this item, in terms of regulations or the laws itself, we have that data privacy in terms of how to exchange certain data. So the framework should be there for us to help us and guide us in terms of how to exchange certain information within cross parties and what's comfortable and what's acceptable in terms of the end customers. Maybe my wish list is really more, the ecosystem right now is really driven by a lot of financial institutions and fintechs in that aspect. But the challenge that we face right now is the government agencies are really something on a catch up. So maybe for us to be able to achieve that whole open banking, open finance, or build that whole ecosystem, our government should be the forefront in terms of transforming their government offices into accepting digital payments. I mean, digital payments has been there. We've seen it, QR payments on the palengke, on SMs, and the things like that. But have we seen these digital payments being accepted on government agencies? Maybe few, but not all. I mean, for us to be able to achieve that open banking, it has to start with some of our government. And to be fair with some of the government, it really, some of our laws are outdated that hinders them to be able to be part of this open banking and open finance ecosystem.
Thank you very much for that question. I, for one, we love our lawyers in RCBC. Whenever we have a project, we involve them already. They're always part of the squad that handles new projects. But as for the legal side of things, so far we haven't, it's not the main barrier that we see, at least from our side of the business, not the main barrier whenever we pursue innovations. There are, of course, limits, and the laws limit it that way. One of the bigger hurdles, at least for banks, really is the BSP regulations. But the BSP regulations, as I've said earlier, they're actually more advanced than what the banks are already doing. They're actually pushing the envelope more than what we have so far. So as for a wish list, the government digitization is always one. But really so far, even with data privacy laws, with banking secrecy laws, as long as the consent has been documented, and that is always, our lawyers keep reminding us of that, as long as the customer consent is documented, and recently, consent via digital is now allowed, so that did simplify a lot of things legally.
Yeah.
Thank you.
Okay. Thank you so much.
Thank you very much. Full transparency, I'm the lawyer. So,
That kind of came out. Thank you so much, audience. Thank you so much, Michael. Thank you so much, Manuel. This was an interesting discussion. Back to the host. Thank you so much.
All right, definitely it is an exciting discussion and intriguing as well. So can we just invite our speakers to please occupy the center stage for a group photo op.